Okay, so the big mega merger is finally here. The amalgamation will happen between Capital First and IDFC Bank. The ratio is 139 shares of IDFC Bank compared to 10 shares of Capital First. What does this entire deal mean for shareholders who are holding shares of Capital First or IDFC Bank or even IDFC? We'll ask Samir KALRA. Samir KALRA of Target Investing. He's been tracking this. Samir, firstly, the deal is done. The ratios are known now. If someone holds shares of Capital First, what is the benefit for him Monday morning?
So Monday morning, it will have mostly a upside. So what happens if you have 100 shares of Capital First? You get 1390 shares of IDFC Bank, which is valued at a 12% premium as of Monday morning. So that premium might go to 5% up or 6% up, depends on the opening. But eventually you benefit as a Capital First because the merged entity will have better fundamentals and a better system to run as a corporate and a retail lender. So you eventually benefit more than being a shareholder of IDFC Bank or IDFC Limited.
So it's a proxy play that you're saying that, you know, so that basically that 12% gap that is there in terms of valuation will get filled over a period of time, but till the time the merger is happening. Secondly, now if you are a shareholder of IDFC Bank, what is the benefit that you're getting on Monday or in the future also?
So if you're a shareholder of IDFC Bank, valuation wise you don't get the benefit. The only upside can be on the merger announcement. So even that you'll get through Capital First. The only plus point which you get to have is now you have a retail lending. Retail lending, which is a higher growth system, higher growth book, and it's at a cheaper valuation as compared to other private banks. So you can benefit on the re-rating of the IDFC Bank, which might happen through the brokerages on Monday morning.
Okay. Thirdly, if you own shares of IDFC Limited, is there anything for you in this entire deal?
So IDFC Limited, I see a little negative side because IDFC Limited, the first is their own book and the second is the shareholding which they have in IDFC Bank. So there will be a dilution of the IDFC Limited shareholding because eventually the RBI guidelines have to come down to 26 to 28% over a period of time. So somewhere that kind of a negative impact will be there because you will have a less indirect holding in IDFC Bank now. So certain way the valuations will get corrected. Initially it might show another upside, but over the time you will have a negative play on that.
Okay. How does the amalgamated entity stand compared to, you know, other private sector banks or public sector bank in the entire banking space? How will this bank have its holding there?
So over there, if you compare today, every private bank which is showing a good loan growth book, whether it's SGFC Bank or IndusInd Bank, they're trading around 4 times to 4.5 times book. IDFC Bank right now alone as a standalone is trading at 1.5. So there's a big margin difference. The only two worries were either it was not showing the growth because it was more on the corporate side, and secondly it was not showing the NPA improvement, which everyone supposed that it will show over time. So now when it gets merged to the retail end of it, there will be better numbers which will come out post the merger. And the other plus side is Mr. VAIDYANATHAN becoming the chairman. So he knows the retail end of the business. So he'll be able to show more growth for what today alone IDFC Bank is showing. So as a merged entity, I think there will be a game changer for the IDFC Bank as such.
Okay, and my final question is now is the peg of the entire pricing of Capital First will be pegged only to IDFC Bank. So going ahead, the movement of IDFC Bank, so Capital First will not matter whatever news come in. It will be if let's say IDFC Bank even surges further, there is the potential of Capital First to play catch up also increases.
So that is also there that whatever happens at the pricing action of IDFC Bank, Capital First will either have more discount or it will catch up. So 90% what happens over the time after the merger is announced, it starts to catch up to that discount and it closes it. So like same happened with Bharat Financial and IndusInd. The merger announced at 13-14% discount. Right now it's trading at a 5% discount. So that's where I think Capital First is, even if you today don't hold any of the three, I think it's better to enter through Capital First now rather than buying IDFC Bank or IDFC Limited.
Okay, so that's the entire scenario analysis of what will happen if you are a shareholder of IDFC Bank or Capital First or even IDFC. And Samir is indicating that this entire merger scenario should now be placed via an indirect route. And if you don't have the best option for you is by Capital First, because that's the indirect way of playing this merger. So that's a complete 360-degree scenario analysis of the merger. Thanks for watching Bloomberg Tweet.